since we've understand that if you want to mark out your discount and premium zones, you just have to take your Fibonacci to place it from the low that caused the break of structure to the current high that price is retracing from, right? So just imagine we have something like this. We have a break of structure to the upside, first break of structure, and then we have another break of structure, right? So, or probably let me just say we have something like this. Sorry, we have something like this because price doesn't just move in a straight line. It's full of choppy movement, right? Let's say we now have something like this, right? So it is very, very important for you to know how to mark out your major break of structure and your minor break of structure. Now, this is the first major break of structure, just like this. And we had this as another major break of structure to the upside. How do I want to mark out my discount and premium zone? Still on that, take your Fibonacci to place it from this low to this current high, right? So whatever other block that you have sitting inside the premium zone is not a valid order block or demand level to buy from, right? A demand level is an accumulated zone, a zone where you are looking forward to buy. So this is also a demand level. Let me mark it out. A level like this is also a demand level, but it is sitting inside the premium zone where we are supposed to be looking for sale. So if I want to take a trade like this, I will just wait for price to trade into this last order block, or maybe if I see a confirmation for me to buy at this level, I'm going to take a buy. But it is not sound, it is not reasonable for you to just take a buy at this level because it is a demand level, right? You want to wait for price to trade into a discount price before you can take a buy to the upside, just like this. Do we understand? Same thing apply to the bearish market. So let me give a bearish example. Let me give a bearish example. Just imagine we have a bearish pattern like this, break of structure, and we have another break of structure. Maybe we have something like this, right? Or let me just adjust this a bit. So we have this first break of structure and we have this second break of structure, right? I told you guys that you have to understand major and minor break of structure, which I think I've explained all of these concepts in my previous videos, right? So this is a major break of structure and each of these one are like minor break of structure. So just take your Fibonacci to place it from this high to this low. We are left with what? Two zones. This is our discount zone and this is your premium zone. So you don't want to risk taking a buy at a discount zone. I mean, you don't want to sell at a discount price because this looks like a demand level that a buy can hold, but it's not valid. You want to wait for price to trade into a premium zone before you can sell price, right? Now, let me give you one tricky example. Probably you want to catch